U.S. imposes 50% tariffs on Canadian goods. Trade tensions reach boiling point. Executive summary. In a dramatic escalation of North American economic relations, the United States administration announced sweeping 50% tariffs on a wide range of Canadian imports. The bold executive measures aim at key economic sectors, including automotive manufacturing, dairy products, alcoholic beverages, and building materials. The announcement has sent shockwaves through financial markets, strained diplomatic ties, and left industry leaders on both sides of the border bracing for supply chain disruptions. The rationale behind the new tariffs. According to official statements released by the White House, the decision to impose high tariffs stems from allegations that Canadian trade policies discriminate against U.S. exports. The administration cited persistent trade barriers affecting American farmers, automotive producers, and distilleries, claiming that current cross-border frameworks fail to protect American labor and manufacturing interests. For years, American producers have been disadvantaged by protectionist measures across the northern border, stated a U.S. trade representative during a Capitol Hill briefing. These tariffs are a necessary mechanism to rebalance our commercial relationship and safeguard domestic industries. Canadian reaction and diplomatic pushback. The response from Ottawa was swift and firm. Canadian officials strongly refuted claims of unfair trade practices, characterizing the 50% tariff penalty as a clear violation of existing continental trade treaties, including the United States-Mexico-Canada Agreement, USMCA. Canadian leadership confirmed high-level discussions with Washington to defuse the situation. Speaking to reporters following an emergency cabinet meeting, Canadian Prime Minister Mark Carney stated that both nations have agreed to intensify negotiations over the coming weeks to find an amicable resolution. However, Carney cautioned that Canada remains fully prepared to defend its workers and strategic economic sectors if diplomatic talks fail. Cross-border trade associations in Canada expressed grave concerns over the financial impact of the tariffs. Representatives from the Canadian automotive and manufacturing sectors warned that tariff barriers of this magnitude could destabilize integrated regional supply chains, leading to higher consumer costs and potential workforce layoffs. Economic consequences and industry impact. Economists and industry analysts are closely evaluating the broader macroeconomic consequences of this trade spat. Key industries bracing for immediate disruption include automotive industry. Vehicle assembly lines across North America rely on a continuous flow of auto parts crossing the U.S.-Canada border multiple times before final production. A 50% tariff could severely inflate production costs for major automakers. Agriculture and dairy. American dairy farmers have long sought expanded market access into Canada. Conversely, Canadian dairy exporters face massive operational hurdles under the new duty structure. Construction and raw materials. Essential materials, including Canadian cement and aluminum imports, are heavily integrated into U.S. infrastructure projects. Increased costs could further elevate domestic construction pricing. Consumer goods. Retailers on both sides warned that price hikes on spirits, wine, and household items could hit grocery shelves within weeks if no compromise is reached. Market reaction and what lies ahead. Financial markets responded with heightened volatility following the announcement. Stock indices in both New York and Toronto experienced short-term dips in industrial and manufacturing equities, while foreign exchange markets saw fluctuations in the value of the Canadian dollar relative to the greenback. Diplomatic delegations are slated to meet in Washington later this week for emergency trade negotiations. Observers note that while the tariffs represent one of the most severe policy shifts in recent North American trade history, both governments share a vested interest in avoiding an all-out, long-term trade war that could dampen continental economic growth. As bilateral talks unfold, domestic lawmakers, corporate executives, and consumers will be watching closely to see whether diplomatic negotiations yield a compromise, or if North America is entering a new era of heightened trade protectionism.